Hello everyone. In this presentation I'm going to cover how to take signals from the Big MACD OTM spread software. Okay, if you are using this for Forex trading, then what you'll want to do is when a signal is issued, okay, zoom in just a little bit here, and I'm going to go ahead and have the candle bodies display for me. So let's just say an example is right here. You see this little arrow? That means a pop-up came up, and if you have your email alert set to true, then you received an email on it. Okay, if you have your email forwarding to your phone, then you would have received a text notification, and if you have your MetaTrader 4 set to give you push notifications, you also would have received an alert on your phone. Okay, now this was a sell signal or a short signal, and excuse me. Right here is where it was issued, and as you can see, the ITM, ATM, and OTM, all three of them say win. If you're only trading this for Forex, you'll probably want to look a little bit more at the OTM, unless if you're only shooting for 10, 20 pips tops, okay, for your trades. If that's your style of trading, that's absolutely fine, but if you're going for a little bit larger movement, then you'll want to look at that OTM win rate. And what happens is when when a signal is issued and you want to enter at market price, you're going to want to set your take profit 1 to 20 pips, okay, with a trail stop. If you don't know what a trail stop is, I highly recommend looking at the SlickTrade, slicktrade.net. They have free education on there, and we have a link in our PDF as well. It covers this type of terminology and how to use it properly. Okay, so I'm not going to get into that right now, but essentially, what a trail stop is once your first take profit is hit, it then moves your stop loss in a more favorable direction. There's multiple ways to use it. You can have it move to a break even, so if the trade ends up going against you, you don't lose any money. However, you can also have it be a different style of trail stop and have it move so many pips after it moves so many pips in your favor. Okay, so instead of moving to a break even, it moves it, let's say it moved into your favor 20 pips, it's going to bring it down however many you have it set to. Okay, so it just continues to make that stop loss a lot smaller, and as you continue to move in profit, it continues to move it for you. Okay, so then you can maximize your profit. Okay, so that's our suggestion on the take profit. Another way that you can do it is to set multiple orders. So let's say you take 4 trades per signal. Let's say you open up 4 different positions, okay, all in the same one. Your first one would have a take profit of 20. Your next one would have a take profit of 40. Your third one would have a take profit of 60 or 80. And your fourth, we would suggest having a take profit of 40 but with a trail stop, okay, or even 20 with a trail stop. It really depends on your trading style. That is something you'll want to demo and find on your own because everyone trades differently. Okay. Your initial stop loss, you're going to want to set to the previous support or resistance. Okay. So, let's say, for example, this trade right here, this was a loss all around. It was a loss for pretty much everything, but what you would have done is when that buy signal was initiated, okay, right around there, you would have entered around market price, and you would have looked at previous support resistance. Now again, this is terminology you might not be familiar with. If you're not, definitely check out that free education with Slate Trade. It's very, very important that you understand support and resistance for these signals, okay? You can just set a specific stop loss for every trade, but you're going to profit more if you understand that support and resistance, because it's not always going to be 20 pips, it's not always going to be 50, it's not always going to be 100, okay? It's always going to range. So looking just at this right here, let me go ahead and zoom in just a little bit. If this, okay, let me do it. Okay, so this was issued as a buy, and I went back and I looked and I saw, well, I wouldn't put a stop loss here. I mean, that's awfully tight, okay? Let's go ahead and look at the next support level. There was a little bit of a support level here. I would almost push it down to here because price has hit this level multiple times. It hit it here, it hit it here, it hit it here, it hit it here. And as you can see, they're all smaller candles or they're pin bars, okay? So price seems to come up to or come down to this level often, okay? So you could have set a stop loss here, or if you are a little bit riskier of a trader, okay, or you take smaller lot sizes, okay, and you're not worried about a larger stop loss, you can go down to the next support level, okay? So let's go down to that. That would be roughly here, okay? Now, here, price came up, resisted, came down, right here of that pin bar, okay? So that'd be that next level down, okay? It depends. The stop loss, you will just want to feel out for your best needs. And if it is strictly a 50 pip stop loss on all trades, then that's absolutely fine, okay? But we do suggest learning this, okay? If you want to go down to the absolute previous support, it would be here, okay? Just remember that if you're doing a, let's say, 100 pip stop loss roughly, and your first take profit is 20, and it only reaches that a certain percentage of the time, then you'll want to think about how many times is that 100 pip stop loss getting hit, okay? It's better to take some losses and move on and just use a trail stop, so when the trades do go heavily in your favor, you're gaining all those pips, okay? And it easily makes up for that, okay? Now, if you did set it to that lowest support, it may not have been a loss. You know, because Forex, you can just let this continue to go. Okay? You can, there is, look at that, see, you would have gained a lot. If you're only trading, if you only want that 24-hour duration, that's this right here, that's where it would have ended. So, you can either exit and take a loss at that point, or you can continue to let it go, okay, and use the heaviest previous support or resistance, okay? So that would have gone in your favor if you set that stop loss. Let's see if you would have used that second one. That second stop loss was roughly here. It would have come down, it would have hit it right there when that dropped. Even though the candle body didn't close below it, it still dropped and hit it. So it would have hit a stop loss. Whereas using the heavier support, it would have gone in your favor. That is something to keep in mind, okay? Let's look at a couple more. I mean, this one right here, this was a short, okay? Now, previous resistance, when this was issued, yeah, previous resistance would have been right here. So, it would have gone down, okay? You would have reached your 20 pips, okay? So you could have either gotten out of that trade at that point, or you could have let it continue to go. It would have come real close. So depending where you set that stop loss, it may have taken you out if you'd continued to let it go, and didn't use a trail stop, you know, and things like that. If you just had that one set stop loss. So let's say it didn't get hit. If it didn't, you could have profited a lot more than just your 20 pips again. Okay, but it just depends on your trading style. Do you want to just grab 20 pips, or do you want the opportunity to gain a little more? Okay, that's one thing with multiple positions per trade, is you can set one that maybe instead of $5 a pip, you only set it at $1 a pip, and that's your one that has your heaviest support stop loss. You know what I mean? Or heaviest resistance in this scenario. Excuse me. And even the last one too. You know. So think about that. That's one thing that we can't tell you how to do that. That has to be something that is up to you and that fits your trading needs. Right here we have this buy. Okay, previous support. The very first support would be here. Okay, that is pretty tight. I mean, if you're doing the multi-position, you could have one position set to the stop loss. But I personally would have probably brought it on down further, more to like this support, right in here. Yes, yeah, right about there. Or you can do the full support, which is right down to there. Either way, none of them got hit. It went fully in your favor. Okay, you would have had multiple take profits reached, or if you just have the one position and you trail stop, then you could have gained quite a bit just from that one. Okay, so that's how this works for Forex. In my next presentation, I will go over how it works for Nadex.